Hello and welcome to another episode of the Finance Freaks. Last episode we talked about SpaceX. Gosh, it's been volatile, but Michael Ivarone, our guest, gave us some excellent insight into the stock, the valuation, and what's in it for Elon Musk if it's really successful. So we thank him for being on the show. We appreciated his insight. Steve, today is the first podcast of our second year doing.
Wow.
Yeah. Imagine that.
No, I can't imagine that. Who would have thought that?
Time flies when you're having fun, though, right?
Yeah, that's crazy. I would never have thought that.
Yeah. So we got a lot to talk about today, but I want to give like an overriding theme, and then we'll hit on it a few times, especially at the end when we start talking about stocks. And my question is value investing dead? You know, because there are a lot of great undervalued companies that, you know, just nobody cares. So we've got to talk about the things with that theme in mind. So let's start with Micron. Holy shit. I heard it cleverly phrased as it's time to drop the micron. I mean, the analysts call, they got estimates of $730 on this thing. It was $1,000 yesterday, and today it was $1,237 the last time I looked.
Yeah. They're talking about, it's crazy. You know, they're talking about this super cycle that they're in, right? That it's different this time. That this time, compared to all the other times that these memory stocks have rallied like this, this time they're going to the moon, right? Maybe they are, but look at those numbers, Bruce. 25 billion for the next quarter. Yeah. They were looking for 20. They're talking about 5 billion more than expected, with pricing increases coming, is what it is. So they're nowhere near done yet. It's just the outlook for these companies is insane, but it's all about AI driven, right? So you asked about value, so everything we talk about will be about value. Is this a value stock? No way, of course not, because we're not talking about Home Depot here, but we're talking about something that maybe got a value in it only because what if it's going to double from here? Is something that doubles based on its earnings value? If it's based on earnings and not hype, it's value then. Does that make sense?
Yeah, it does. I think it's getting a lot of play too because they're the only manufacturer here in the United States. And, you know, the world is a crazy place. So by hook or by crook, they'll be able to do business where somebody else might get interrupted.
Yes, correct. And they're really killing it, though. Killing it. But sometimes you get people that buy on rumors, sell on news. So, there's going to be some more fluctuation here.
Sure, but I always look at this. The stock is up a lot today, $200 on 1,000, The only reason why the stock is up that much today is, number one, you don't have anybody taking the bait on the sell side. And number two, you got some fresh buying coming in. So the people who are buying here at $1,200, what the heck are they looking for?
Look, you have estimates at 1,600 to 2,000 now, right, on Micron, but it kind of makes sense. I know it sounds crazy, but it does. When you have a company that says that they're going to hit 50 billion next year, that's insane. On a company that was literally doing like 8 billion a year ago. So why can't it? It's not an incredible value play, but it certainly is something that can make you money, even at these levels.
You almost want to buy the dips. Think
about how many people were probably waiting to see what the numbers were, hoping that they weren't be so great and that the stock would be down for them to buy. Now they're chasing it up here is what's happening.
Well, we'll see. Just so you know, just to give the counterpoint to that, the analyst that called Nvidia in 2010 to be the top performer for the next decade and forward, put out a list of its top 10 AI stocks, and Micron wasn't on it.
Really?
Yeah, I don't get that. How could it not be? How could it not be?
I don't know. How could it not be, right? It should be. I
Yeah,
wonder if it's in the Seligman fund. Did you look lately if they moved it in there?
I have not. I have not.
We should take a look.
Yeah, I will tell you their top six has not moved. I haven't looked down. I haven't looked down the
Right.
scale yet. But hey, Steve, there was a sell off in Korea a couple of days ago, and that sparked some selling here on tech. Um, I don't know. I still think global markets are pretty stable. What about you?
Uh, Listen, the Korean markets, the markets that are outside the United States, do they have curbs? They don't have the same type of curbs as we have. So certainly that market out there, I've seen them at times move 10% at a clip, and you're like, oh my God, that's crazy. Because imagine if we moved 10% in a day, what panic there would be.
Sure.
But, right? But because they are so illiquid compared to the United States market, and because these other markets are so highly concentrated in, especially that market in technology and that's what they do, you get a sell-off, it just goes quick, right? And then it starts to stabilize again. So I don't think that the world isn't unstable. The United States is certainly not unstable. We don't follow suit. Did we go down in the morning? Like I'll tell you what, overnight when that was down, that when that market was down 10%, we were down like 2%, right? But by the morning, we came right back, right? So I think that what you're getting here is a coming into the summer, a little bit of a sideways. I think we talked about this like a few weeks ago that I would expect to have consolidation after that huge rally that we had in February, March, and April. Right now, you get a couple of months of trading sideways to down, scare some people out, churn the market, and then we rally again right into the end of third quarter into fourth quarter is what happens here.
So, you talk about other markets. There is a new small cap market in the Seychelles Islands called Emerge. And it's pretty interesting. I'll talk a little bit more about it with you off the show. But a lot of powerhouse European investment banks and banks are taking seats and starting to participate on the merge. It's definitely the Wild West, It's like the OTC market in the 70s right now, but like I said, some real serious players are taking a look at it. So I'll give you my thoughts about that offline, but there are a lot of alt trading platforms out there in the world these days. I want to say one more thing about the Korean market. There's a company called Hynix,
Yeah,
Hynix,
sure,
AI
sure.
company in South Korea. Because of the success of and the valuation more than anything else of SpaceX, they've decided to come public here in the United States. They're gonna raise about $29.5 billion here in the United States. And the reason I mention it, and they have not proposed a date yet for when they go public, but I imagine it'll be in the next couple of quarters. The reason I mention it is, you remember when a lot of the Chinese IPOs got very, very hot here in this country?
Yeah,
And you saw some
sure.
huge
Huge.
gains,
Yes,
crazy.
huge.
And that was because a lot of Chinese money, besides American money, a lot of money from China came flowing into these stocks, and these people weren't sellers. So you had a ton of buyers and no real sellers, and the stocks went up astronomically. I'd probably play this Hynix when it starts to trade for that same reason. I think we'll see a ton of Korean money flow into the U.S. market to own that stock. It's a very large, well-respected company in South Korea, and that's one that, when it comes, I did not play the SpaceX IPO, but I would play this one. So
Okay.
so guys, HYNIX. We'll tell you more about it as its IPO approaches, but I think that I think that that's a worthwhile pursuit. So
I like
so
that stock too. I know it's coming here, and that's a good idea, Bruce.
so I tell you, Steve, I know you just made an argument for a healthy reset in the market, but you can find just as many analysts out there that say the bubble is bursting, or as Chicken Little said, the sky is falling. I don't see it. I get a little nervous from time to time, but I don't see it. Neither do you, I guess, right? We don't.
I mean, look, I'm always nervous when I see markets rally like this because that's just me. I'm just a nervous guy. I get worried all the time. But I do think that, and that keeps me, it's healthy to be worrying because otherwise, if you think everything's great, you end up losing money. You always have to worry. But I think that in this case, we have a market that it has been hated from when the S&P was at 6,000. It's been hated when nobody believed it would get to 7,000. Right now we're above 7,000, and everyone was like, "No, it can't happen. We have Trump in office, and the world is collapsing, and we have a war going on." Meanwhile, nobody cares. After the first initial 5 minutes of people getting worried about whatever the issue is at that moment, they then realize that earnings are so incredible. I will tell you, remember, Bruce, we talked about this about a year ago when we started. You had said maybe this is a time that the S&P, instead of having the typical S&P earning at around 16, 15 times earnings, maybe this is now the time that we're going to have an S&P earnings of 23, 24 times, right? And why can't it be there if we have the overall earnings of the economy are running? That's what you said. And I think that's what's happened here is we have
Yeah.
such great earnings that it makes it's okay to have the S&P at 7,400 going to 8,000. Okay, so instead of having it at 16 times, so maybe we'll be at 25 times earnings, which may be scaring people, but why not? What if we have 30% growth rate is what's going on for the next 5 years? That's what I'm thinking.
Yeah, and I think you're right. I'll date myself. Back in the early '80s, when I first entered Wall Street, people talked about 12 and 13 multiples as being high, and you don't forget that was coming off of the Jimmy Carter era with stagflation. Zero to negative growth, uh, interest rates. I mean, how do you grow business? Interest rates were like 7, 18, 19%. It was nuts. So it's perspective. Sure. I mean, 12 is high when businesses really aren't growing at all. But if you have, and the word is, because anybody can have a good quarter or a good year, but if you have sustainable year over year 30% growth in your future, then yeah, you should be afforded a much higher multiple. I agree with you.
Yep.
I agree
And
with you.
that's where we are. It just feels that way. That's where we are.
So there's a big cap stock that something happened to, and as much as I'm going to talk about the stock for a little bit, I think it's a lesson for business owners. And the lesson is it almost doesn't matter how big your business is, how long it's been running smoothly, how uninterrupted your growth has been. Business is not about avoiding crisis. In business, crisis or difficulty, I think, is an inevitability. I think to be a good CEO or a good CFO that can manage cash flows and financing effectively. It's crisis management. You got to know how to act when crisis comes. Anybody can be a good CEO or a good CFO when things are going well. It's it's what you do during the storm. And I mentioned that as kind of an intro to Alphabet. Google's parent company lost two. You think about the enormity of Google and Alphabet, their parent. They lost two guys, but two of the top AI researchers, and the stock reacted. The guys' names were Noam Shazer and John Jumper. One of them went to OpenAI and the other one went to Anthropic. And the stock dropped like 7% in a single day for two guys. So why does it matter? I mean, real AI talent is incredibly scarce. And that's why companies will pay a gigantic premium for it. I mentioned last week that my business partner in the merchant cash advance business, his son sold a company that he started 2 years ago called Fractional AI for $300 million. And what they had was a unique ability to make Anthropic's AI work in scale for pretty large businesses. And Anthropic said, they do it better than us. We have to own them, and it doesn't matter how much we pay,
Oh, yeah.
So, that's a tough one for Alphabet because it gives its rivals, those two companies, kind of inside knowledge to where Alphabet was going, So I think it's a really big deal. I mean, it's not fatal because Alphabet is a behemoth, They have the financial wherewithal to hire new people or buy another company that may be, a leader in the space. So, look, Google still has massive computability and all that stuff.
Bruce, it makes me sick. I'll tell you why. It makes me crazy. I consider us pretty smart. We're smart guys, absolutely smart guys compared to the average bear out there. But these kids, like you just mentioned, these kids are geniuses. And not everybody is, but think about how smart they are to figure out this technology, which is not the easiest thing to figure out. But they have such genius brains that they're able to, in 2 years, create that type of a wealth for themselves. And everyone else, well, most of the rest of the world, drugs along, tries to get, make a paycheck. And then you get somebody that's so smart can turn in 2 years 0 into 300 million. It's just makes me sick, actually, that it's not me.
Well,
in all honesty, Bruce.
I'll tell you how it goes, Steve. If every generation in this world that was born had to reinvent fire and the wheel, we never get very, very far. Okay.
Right.
So as people, we're copycats, and right now, AI exists. Okay, I won't say it's commoditized, but there's enough companies that can produce an AI functioning model so that it exists. So guys like this are just smart enough and have enough insight to make very small adjustments to something that already exists that have huge impacts. It's like you've got this big block Chevy engine, and it's chugging away. You could hear the power, and there's a little screw on the, there used to be carburetors, now it's fuel injection. There's a little screw that adjusts the fuel air mix, and that that half a turn to the screw added 25% more horsepower to the engine. And that's where AI right now is. The platforms exist. It's just they're really tweaking the platforms to make them hyper functional. and that's cool stuff, man. You got to give it to them, you know. And I give them credit. 'Cause they must have started very young as kids and really been into it. But if you and I studied every day until we die, we just, you know, we wouldn't get it.
Right.
We
Never
wouldn't.
get it.
Yeah, yeah,
Yep.
yeah.
I get it.
So, what do you think, Steve? All of a sudden, borrowing fears hit SpaceX. What did he say? SpaceX just raised, you know, a ton of money. They've got over $100 billion in the bank, and Elon Musk said he wants to raise another 25 billion or so in intermediate grade bonds. Was this the right time for that announcement?
Listen, the reason why he does that, at least again, I'm not sitting in the war room with him when they decide what to do, but I would say that the reason why you do something like that now is because, first of all, you have all the attention on you in a good way that SpaceX is going to be the next, coming of Christ. And by bringing in it's almost like a partner, because think about it for a second. The bonds that you're issuing, you're you're raising money, and the investment bank or banks that are raising the money for those bonds, now they're your partner. So now you've got because again, they get paid big fees
That's a
on
great
20,
point. I hadn't
right?
thought of that. That's a great point.
Right. So now you on $25 billion. Remember, they probably charge, 1 point. If it's 1 point, that's a big number,
Yeah.
right? Right. So if that's what they're like, all right, we'll issue you a bond. You'll raise more money because they didn't need the money right then, but now they have these investment banks, and I would venture to guess it was Morgan Stanley, maybe Goldman Sachs, right, Bank of America, that are now in their deal in a different way now, right? And that's what they do. They give it to their clients, the high net worth clients. They issue it out, and they'll now be part of the group again, is what it is. Instead of just doing the deal that they did by going public and doing that, now they're going to the next level. It's a big money game for all of them. That's what I think it is.
Yeah, and debt, and I will tell you, I've never been a great debt guy. I made an awful lot of money at the end of my Wall Street career, trading junk bonds and some distressed debt. I was pretty good at analyzing the underlying value of those things, and I made some real nice money. But debt is a tool, like anything else in a business's toolbox. And as a prime example of that, look at Apple. Okay, Apple has way more money than almost every country in the world. I mean, they got billions and billions and billions of dollars in cash. Their cash flow is astronomical, and yet there are bonds out there. You know, because, well, first of all, you know, Apple can borrow at 7%, where a lot of people can't. You know, or 5%. But
5%.
they just say that that's cheap money. We want to keep our cash, and we can service the debt and still show a tremendous profit.
Yeah,
So,
sure. And by the way, the interest that they pay on that is tax deductible anyway.
yeah, yeah,
So they don't care.
yeah. So I think it's just, you know, and people are worried that maybe Elon Musk is signaling that the cost of him getting to the next level in SpaceX are going to be astronomical. The answer is probably, okay, probably. But he's also on a roll. Why not do it now? Strike while the iron's hot. So
Right.
I did not perceive it as a negative like a lot of Wall Street did. You know, the stock got hammered a little bit for a couple of days.
Yeah, no, no. Now these guys that have the bonds, now they're gonna, if Elon Musk needs another 50 billion in another 6 months from now, they'll raise it for him. Sure, because they got the bonds now. So now they got bonds. Let's go. Let's now they'll raise more money because they want that company to do well now. So not a bad idea.
So while we're on the topic of borrowing and interest rates, Kevin Warsh came out surprisingly tough with an anti-inflation stance. Tell me your thoughts, and I'll tell you what I like best about what he said. Go ahead.
I think that he had mentioned beforehand when he was being vetted that he's not going to be a quote unquote puppet, right, for Trump. He's going to do what he feels is right. He was never expected to be a dove where he was just going to start lowering rates. And I think that he's setting an example here for the rest of the feds and the Democrats to say, hey, everyone, shut up. I'm not going to just do that. If we have to raise rates, I'm going to raise rates. Do I think he has to raise rates? I think he's signaling that it's coming. I'll tell you what, I'm going to not throw something out today. The PCE indicator came out, right? That is the an index that the Fed really looks at the most when it comes to inflation. And that reading for the month of May was a 4.1%. So think about it. We were at 2.7% inflation about 9 months ago. Now you're at 4.1%. I know it's not a lot, but remember, we're like the we are the Queen Mary of cruise ships, right? To turn us around, we don't move like a speedboat. Everything takes time because we're so big. So we're creeping up. You may see now oil is back to $74 a barrel, right? So if oil stays low, maybe he'll signal we don't need to do anything. But I think that he's gearing people up to say, hold on, I may have to raise rates, and that scared people. That's my thought on that.
So, so here's what I took as real interesting, and I happen to agree with him. He said that to sum up his core position in a line is that inflation is a choice. Inflation is a choice. And I got to tell you something, Steve. During the pandemic, the Biden administration was spending like drunken sailors, $1 trillion spending, Inflation Reduction Act was so inflationary. It's just, I can't believe they had the balls to call it that.
Right.
But, through inflation, we had a few years of high inflation. The dollar is worth a third less. So whatever money you borrowed a few years ago, you're paying it back with dollars that are worth a lot less. So I kind of think that inflation for the previous administration was a tactic, not an outcome of their policy.
Okay.
It borderlines on conspiracy theory, but I bet I'm right. I bet I'm right.
Okay.
It just there's in politics there's nuance. They were interviewed Chuck Schumer recently, and he said if the what's the bill that they're trying to pass for voting for
Which one?
voter ID, Save America Act or something like that.
Oh, yeah,
And he said that's going to eliminate 25 million people from voting. And the reporter said to him, "You mean 25 million citizens from voting?" And he wouldn't answer that. Interesting.
interesting.
Yeah.
Yeah.
I get a kick out of the fact that in Chicago, they're like absolutely against voter ID laws. It's repressive and it's this, and for the new Obama library, if you're a Chicago resident, you get a discount to go in, but you need ID to prove. So it's just such an incredible double standard.
Right.
So I think Warsh has said that there's a willingness to raise rates if indeed he wants to. I think he also signaled that the markets have been too dependent on Fed guidance, and I kind of agree with that. I think he may push to remove forward guidance altogether.
He did say that. I know. And I like that actually, in all honesty. I think that when you have guidance, the problem that we've seen is that we react too quickly to whatever the guidance is, and we don't wait and see. So markets move based on guidance, and when somebody is saying like here, he just is it about faces. Everyone was thinking we were going to have lower rates. That was the guidance. Now we're going the other way. Just why don't we just sit and watch what happens, and then as we get through the different numbers, we'll make a decision, right? We don't have to sit and tell and say, all right, everyone gear up. This is what's happening, because you don't know what's going to happen. It changes, and I think that's why he's saying, look, it changes too quickly. I don't want to be giving guidance on one way and then have to change it and look like I didn't know what I was talking about. That's why.
Yeah, and I think that that's the least healthy option for the market, where there's just yeah you're ending up with less certainty and less predictability because of guidance, not more, not more.
Yeah.
So
We'll see.
before we get into stocks, a couple of things. Well, we're on the topic of interest rates, and even though interest rates are going up, the car business is soft right now. Car business is a little soft. Both the new car market and the used car market is soft. So a lot of companies are incentivizing people to buy cars. So we always do a little something for young people, and this is good for anybody, but in particular young people that are on a tight budget. The average person in the first quarter of 2026 that refinanced their car loan lowered their rate between lowered their rate by an average of 2.4%. That's a lot.
That's a lot.
Yeah, so that's about $30 to $50 a month in savings. If you do the refi and it's $50 a month savings and you still are making the same payment, you'll pay your car down. That's an extra $6,000 a year. If you got a $20,000 car loan, you're done. In a couple of years.
Yeah.
So guys, if you have a car loan out there, if your credit wasn't that great, if you've improved your credit a little bit, or you just want to check, you should check and see. I mean, if you can lower your I would say the threshold is about 2%. If you can lower your car loan or your auto loan rate by about 2%, it's worth doing. It's worth doing. So for all your investors out there, particularly young investors, that's something you should look into today.
And by the way, we started off by talking about value.
Yeah.
Everyone, a lot of times people, the pundits out there say, "Oh, Ford, General Motors, these are value stocks." Yeah, they're value stocks that don't go anywhere. Okay, Ford is still at around $12, something like that. Hasn't moved in, give or take $1 either way in like I don't know years. I
For
can't
a
even
minute,
remember.
we thought it was going to go up, but then it stalled.
Stalled, right? So value, back to value. Yeah, value is great when you're 60 years old and you don't want the gyrations of the market, but don't think you're going to make money on it. Okay? That's not what has moved in this incredible rally we've had. So, yeah, value doesn't mean money. Okay? That's all I want to throw out there.
Yeah, I mean, look what happened with Wendy's stock.
Right.
It got hit on Reddit and it was up like what, 25, 30% in a day?
Yes.
Wendy's. I mean,
Wendy's.
Yeah, I mean, they didn't go up 25 or 30% in revenues or earnings.
Nope.
It was just a stock that got chased. And there was a book everyone should read. It's called Reminiscence of a Stock Operator, and the moral of the story with that book. It's a great book on trading if you want to learn trading. It was written pre-market crash in 1929.
Right.
And the theme in that book is the trend is your friend. Don't buck the trend. And I think that that's true, and I think that that's correct. You might get right being a contrarian, but you could also die waiting and die trying.
Yeah, it's funny. You mentioned that book. I haven't heard that title in a while, but I remember when we were on Wall Street, that was the book you read.
Yeah.
Right? Everyone said that's the book. I've heard Kramer say it all the time too. That's the one. And it was before the crash when you think of it.
Yeah.
So that's a good one to read.
Yeah, so apparently, the stock market back then was a rich person's club. The average guy had no ability or access to
Right.
trade. So there was something called bucket shops. And what a bucket shop was, and people use that term loosely now for a small firm with a bad reputation, but that's not what it is. A bucket shop was a shop that would let people make small investments in stocks, but they wouldn't actually sell them the stock. It was they would bucket the trade and give them their win or loss minus a commission based on the ticker. So they would drop the trade in a bucket and watch what happened rather than actually buy the stock. So if you guys out there were curious about where Bucket Shop came from, that's where it was. That's where it was. And they disappeared after the crash. They disappeared.
I didn't even know that. I didn't know that. That's
Yeah.
a good,
Yeah,
yeah,
interesting, right? Interesting
yeah, that
stuff.
is. That is.
So, real quick on politics before we do stocks, and we're getting there. So, I can't believe these Zohan Mandami supported far left socialist communist candidates are winning. I mean, it just blows my mind. It just blows my mind.
Bruce, we are in a totally different planet, you and I, than the 23 to 28-year-old. It's just, it's a completely different world that we live in. I couldn't believe how many went that direction, which says to you that people like change, right? They want to change. They feel they're not being heard. They're not making enough money. So it doesn't matter what the future will be based on who you elect. They just want change. And they'll figure it out later if it worked for them or not. But it's amazing, right? It's a clean sweep on the Mandamis.
Yeah, yeah,
Clean sweep.
yeah. And he's coming to national prominence. I heard a guy last night, actually, or Tuesday night, who I like and respect. And I joined the conversation because he was just gushing about how great Mandani's speech after the Knicks' victory was, and how uniting it was for the city. And I listened to the speech, and I will say it was a pretty good speech. It was uniting for everybody except Jewish people. But you know what I said to him? He goes, I said, "Do you you're Jewish? Do you support that guy?" And he goes, "Look, I'm just saying he made a great speech. Can't I give him credit for that?" And I looked at him. I said, not for anything. Hitler was a powerful orator. He made great speeches, and then he started to kill people. I said, no, I can't support anything about that guy. I'm sorry. I'm a capitalist. I'm a free market guy. I'm a small government guy. Listen, leave me alone. I give generously to charity. I was on the board of directors of the YMCA for over a decade. I still give a ton of money to St. Jude's because my middle name is St. Jude and they do good stuff. Leave me alone. Leave me alone. I am the best steward of my money, not you, Um, you know, uh,
Yeah, I listened to the speech. This is just me personally. I have a very hard time when he speaks. He because I know he's only 33 years old. I guess I have a negative bias towards that because I know he doesn't have the life experience that he's preaching. And to me, that's just it's a great salesman because he does capture people. He's good, but I don't like what he's doing, and what his thoughts are. So I have a really hard time with it. That's all.
so do I. So do I. All right, on to stocks. Steve, help me. I think I have the same problem that a vast majority of our viewers and listeners and a lot of people that are in the market right now have, and that is I'm a little stuck. I'm a little frozen. I mean, I'm probably off over $1 million from the peak in May, but I still have huge profits. So I hate to sell it, geez, I hate it because it might go back, but then again, it might not. When you make those decisions, how do you look at things?
I look at it through experience of losing shitloads of money, personally, okay, in the past. So when you're young and you start out trading and putting money in the market, everyone says, just leave it there. Okay, great. That's true when you're young. As you get older and you realize, wait a second, I don't want to lose that money again because it always cycles. No matter what people say, Bruce, there's always going to be a recession some point in our life again. It's not going to be smooth sailing for the next 30 years. There's always something that trips it up, right? Always. So my feeling is that because over the 30 years of making a ton of money and then watching it go back down and not taking my money off the table, I have been beaten down so hard by life as far as not taking money off the table that I realized for me, I can't do it again. I can't. So what I do is I told you the other day, when we do something, when we're like at this point, and we were like this for about a month and a half, every day, I go to cash every day. So I could work on my business and not think about it. And I know that's the wrong thing for most people, but that's just me because I've lost so much by not taking money. So now you're saying you're frozen.
So I'll give you some questions. So I'm still up big on Microsoft, but not nearly what I was. What do you do?
Okay, what do you do here? So what do you do? If you're up big on it, you got to take something off. Even though we said that Microsoft was going to go back, it will. It will. But what if you picture this though? If you know yourself psychologically and you know that if we continue to trade lower, that you're going to get fearful instead of greedy, and you're going to sell later on because of the fear of when you finally hit that threshold of pain, that's the time you buy, not the time you sell, right? But you can't do that because your psychological makeup of a human being is fear and greed. You're greedy like everybody else because that's the world that we live in, right? We want to make money. When you start to get the fear of losing and you hit that point, that's when you say to yourself, I've done it. I've done it all. You're like, that's it. I can't take it anymore. I got to sell. That would be the wrong time. So when you're up and you are, take something off. The worst that happens is you have cash for something else. Remember you said Roy Konofsky. What'd he say at
We'll
Roy's?
find something else.
There's always another stock out there, Bruce. Always.
And what about Tesla? I'm
Unexpected.
still up 150 bucks on Tesla.
Take 20% off. Take 25% off. Do something. Don't just sit there. Because if we do spend another month coming down or 2 months, you know that if the stock goes below 350, you're going to start to say, fuck. And you're going to that's when you're going to start to sell, right? Okay. So if it goes up, you still have it. It's not the end of the world, but you should be doing something here. There's nothing worse than looking back and saying, oh my God, why didn't I just take something off, right?
Yeah. Did that with Aspen University. I had 100,000 shares at 13 in 2019, and I was absolutely sure it was going to be 20 bucks in 2020. And that was my mantra, 20 in 2020. And then it went to 10, and I said, it'll come back. And then it went to 8, and I said, well, you know what? I'll pull the trigger if it goes back to 10. And then it went to 6. And anyway,
Yeah.
I still have 100,000 shares at 16 cents. And I can't imagine how I watched 1,000,003 go to 0 and did nothing. You know, it just I can't imagine. You know.
No, I told you. I mean, I have so many. If people wanted to hear, I could do 10 episodes, no joke, of just talking about the failures. Okay, the ones that I did the wrong thing on, and that's why I don't do it anymore. Like when I told you this, and it's so embedded in my brain, Bruce. Michelle, my wife, was like, "You fucking moron." So we were young. I was 20. I was just in the market. I was 26 or something like that. I forgot how old I was, and I put $16,000 into a stock account when I was sitting at right after it was I forgot Joseph Thal. If you remember company Joseph
Of course
Thal,
I do. Yeah.
okay. So that's where I went. But my first thing was Joseph Thal and Company. And I was like, hey, great, I'm going to be a stock guy. And I put 16 grand in. And that was like, at the time, I had no money. I was like, all right, 16,000. And that was when we were in 1990, whatever, 99 or 90, 99. And I took 16,000 and I literally turned my own money from 16 grand into, it was like 400,000, right? In a matter of 2 months, I think it was 2 months around there. And, for me, that was like, oh my God. I'm like, I'm going to go buy a house. Remember, a house at the time you could
Sure.
buy,
You could buy a house and a
right?
half. Yeah.
Right. So I was like, I'm a man. I felt like a champ. I was like, Michelle, look at this. And she's like, sell. And I'm like, are you crazy? I'm not selling. I'm going to go to 1 million now.
Yeah.
Yeah, well, 2 weeks later, I was at 50 grand. Okay. And I sold it at 50. And she's like, you just gave away a house in 2 weeks. What kind of moron are you?
Yeah. Yeah.
And I remember sitting in the living room, Bruce, and she was saying it, and I was like, and I remember I was looking at her. It's like clear as day, like it was literally today. I will never let that happen. I did let that happen on other occasions, but nothing like that. And I will never let that happen again, where I'm up so much and I just ride it back down because the feeling is just horrible.
Keep what you make. People in the casino say, I'm playing with the house's money. Once it's in your rack, it's your money and you're risking your money, right?
Correct.
Yeah.
You're not playing with the house's money. That's your money. Exactly.
So before we go to my joke, any other stocks you want to highlight?
Listen, I want to tell everybody real quickly on this because I know it's crazy, Bruce. We could literally go hours at a time. It's crazy. But I will tell you, I'm being careful on the market here. So the stocks like the NBISs, the APLDs, all of these kinds of stocks that we've talked about for the last, I don't know, year, let's say 6 months, be careful at the moment. Don't ride them all down for the next 2 months if that's what happens. Be careful. I mean, maybe next week what we'll do, Bruce, is I'll give us price points on every stock that we had. This is where you sell.
I think
right?
that's a great idea.
That's what I'll do. I'll put definite price points in. Here's where you sell, and I'll show people on the chart, this is why you're selling right here. Okay? But look at the ones that have rallied that we haven't talked about. Remember Target that we discussed?
Yeah, I do.
New highs right now. Okay? It was $100. It's $140 right now. Some of these stocks are actually value plays that are working out better than expected.
BlackBerry at 5 is now 1050.
Right. You said BlackBerry, right? Here it is at 100% higher.
Yeah. In months, double your money.
Right.
Anyway, we covered an awful lot today. Guys, thank you for listening. We enjoy doing this. All right, I got a joke. It's probably not appropriate, but I'm good at not inappropriate jokes. So a Frenchman, an Italian man, and an American man are talking. And the Frenchman says, after I make love to my wife, I drizzle fine French champagne on her body, and then I slowly lick it off, and it drives her crazy. And the Italian man says, after I make love to my wife, I sprinkle rose petals all over her body, and I gently blow them off, and that drives her crazy. The American man says, after I make love to my wife, I get up and go wipe myself off on the drapes. That drives her crazy.
I like that one.
All right. Guys, thank you for listening. We'll be back next week.
Wait, give our Instagram and our email.
Yeah, Instagram, we're the Finance Freaks. Our following is increasing by leaps and bounds. Lots of new clips. We have a new marketing company, so check us out. And email financefreaks, 2 at gmail.com.
And our YouTube channel.
YouTube channel is Finance Freaks at YouTube. You'll start to see more and more posts there, too. Guys, have a great week.
Thank you.